Okay, I want to first thanks everyone who has joined for joining, and welcome to those who are still coming on. Today we have two guests from LTCI Partners. Steve Kane is the director at LTCI Partners, and he leads their sales and business development efforts nationally. He's a Los Angeles CA native and has been in the insurance and financial services industry for 20 years. Steve just finished serving a 3-year term on the board of advisors for CLTC, and he currently chairs the LTC Insurance Working Group for NAIFA. A self-described LTC nerd, which I think, Steve, many of us have also called you. He's passionate about helping advisors and their clients plan for long-term care. And let me share a fun fact about Steve. He played college and minor league baseball before entering the business. But we all know he's still known. He knows how to hit it out of the park. Tom Riekse is the managing director of LTCI Partners. And Tom leads one of the largest national insurance distributors focused exclusively on long-term care planning. Sorry, sinuses. LTCI Partners offers solutions for financial service professionals and employer groups. I have personally worked with them in that capacity, and they are terrific at what they do. Tom's been working in the long-term care insurance industry since 1995. And a fun fact, although I'm not sure it's exactly a fun fact, he celebrated his 30th year in the long-term care business. Welcome, gentlemen.
Thanks.
Thanks.
Excuse me, this is ridiculous here. Okay, so I would like to also let all of you know and remind many of you that, so sorry, that this presentation does include some tax and legal information. Please do not take that as tax or legal advice. And please, the presentation is not to be distributed or duplicated without the written consent of LTCI Partners. So what are we going to cover today? Well, we're going to look at industry trends, and certainly we're going to look at COVID-19's impact on employers, employees, and enrollments. What about marketplace changes? We certainly are all interested in knowing the news and the views. We'll have an overview of Group LTC Insurance Solutions, and we will address the issues of elder care and caregiving in the workplace. Hopefully, we will have time for Q&A. If you have any questions, please put it in the chat box, which I will be monitoring.
Great. Thanks, Carol. And I want to thank everybody for taking time today to talk about long-term care planning in the workplace. I'm not going to beat you up with statistics or spend too much time on the why, but I always find this one interesting. I think things are changing in terms of people's understanding of long-term care needs, understanding of long-term care planning. I think it's for a number of reasons, and you can use this example for the individual marketplace if you work there, or the corporate marketplace. We've got shifting demographics. You know, we're for 20 years, or Tom for 30, you know, we've been telling advisors and their clients, you might need this one day. This might happen to you. Well, I think we've hit that critical mass where we all have like firsthand experience now of knowing somebody that we care about that has needed long-term care or going through something. Tom will talk a little bit more about COVID and how it's impacted our industry, but like, how's it impacted me? Like, my wife had a cold last night, or what turned out to be a cold, thank God, but like her eyes were running and her nose was running. And I'm like, get away from me, you know, stay away from the kids. We're all freaked out about our health, right? With COVID. And, you know, that unexpected healthcare event that we've been talking about for the last 20, 30 years, it happened. And people are having to deal with this stuff. I would also say that there's folks like me in that sandwich generation that have young children and are caring for their folks as well. That's certainly brought long-term care front of mind. And then lastly, in the corporate marketplace, we've seen such a big push with financial wellness and retirement readiness. And in a lot of that literature, which we'll talk about, it says, hey, you got to have a plan for healthcare in your retirement years. It's not saying go out and buy long-term care insurance and that's the only solution, but these programs are addressing healthcare in retirement years. And here's the disconnect on the individual level. LIMRA and Life Happens went out and surveyed folks, and you look at long-term care kind of in the middle there, and 55% of consumers surveyed said, hey, I need this stuff. When they were educated about the issue of long-term care, they said, I need it. 35% said, yeah, I think I know something about it. I think I understand big picture, what this stuff is. Yet only 15% own the coverage. And hopefully we'll help you today kind of mind the gap or help with this disconnect. It happens on an individual basis. And then as you can see here, it happens on a group basis with employee benefits. One of our carrier partners has done just tremendous research over the years in looking at what's important to employees with respect to the employee benefits that are being offered. And certainly long-term care is not like a benchmark benefit where everybody's offering it. This is still wide open. There's tremendous opportunity, and particularly, where you're working kind of in the small to mid-market, if you're there, there's tremendous opportunity. You're likely going to be the first person to bring it up. But you can see here in a recent Transamerica Center for Retirement Studies research report that 74% of employees were asked, hey, what's important to you in terms of all the different benefits? And 74% of them said long-term care is important, yet only 25% of the employers are offering it. And that, along with critical illness, are the two biggest disconnects with employees' concerns and employees offering. And every year MetLife comes out with a big employee benefit research report, and they ask employees, what worries you, what concerns you, and healthcare and retirement and longevity, are the top two, as you can see here. So the bottom line is that there's a big disconnect out there, and we think long-term care more than ever before can help solve some problems. So we promised a quick marketplace update. Tom, talk to us about what's going on.
Sure. So, and one quick point on that previous slide, Steve. I think that one of the interesting trends has been during these crisis times, the trust that people have had in their employer for giving them guidance, as opposed to maybe the government or the media or different places that traditionally they may have gotten advice from. So that's another reason why I think it's a timely thing to talk about the group long-term care marketplace. The COVID really impacted, and the stock market correction in spring of 2020, and the resulting very extreme low interest rate environment really impacted the long-term care insurance world in 2020. So we saw an impact, of course, where people were in the spring were it was not top of mind of something to do. And then with the interest rate environment continuing to be really low, companies, had to adjust some of their pricing on newer products as well, which led, as often is, to, in the fall, a increased interest, understanding, of course, with COVID's impact on nursing homes, understanding the impact of long-term care, and sales kind of picked up in the second half of the year on the individual marketplace. So you've got new carrier entrants on the specifically on the hybrid life with long-term care extension products. So you've seen some new companies enter the field, which has been great. Some new products come out, adjusting product features. So all of that is good for a good competitive marketplace. As you mentioned, Steve, and we'll talk about this more, group life has become a popular product. In voluntary group life, again, people faced with, mortality is a thing that could happen. We've obviously had a lot of tragedy and deaths over the last 18 months and so last 12 months more. So you've seen an interest in voluntary group life products, and with that, the long-term care that goes with it. It's happened quite a bit. The long-term care in-force premium increases have continued to happen with many carriers. And different companies have, and different state regulators have arranged and implemented those increases in different way. And so one of the trends that's occurred and is happening is the National Association of Insurance Commissioners has really put a priority on getting a hold of how rate increases are handled on a state-by-state basis, and also options for consumers when those rate increases occur, so that they can, for example, which many of probably on the phone who own on the call who've owned long-term care insurance, and as I have personally done, reduce their benefits to limit the amount of the premium increases. So even though the in-force premium increases have continued, there's also been mechanisms for making the consumer experience better, because the worst thing that can happen, obviously, is somebody to say, after a premium increase, I'm going to stop paying premiums and lose all that valuable coverage they've purchased. We're going to talk a little bit about health savings accounts and the increase in limits and how they work with long-term care. A couple carrier items in the news. So obviously there's been a lot of things happening with companies, but these are two of the major ones. Genworth ongoing sale to China Oceanwide. Genworth has one of the largest in-force blocks of business. They've been trying to have this sale occur for a while. And I guess, Steve, we're still kind of in a suspended mode. But at the same time, I think Genworth's got such a big block that the regulators and Genworth have been adjusting on the fly to say, hey, if this doesn't happen, we've got to have a plan as well.
Yeah, I think they're in plan B mode. I think we're all hopeful that at some point this transaction will be consummated, but if not, I think they're in plan B mode. And as an industry, I think we're all rooting for them to get this done. What about Transamerica?
Sure. So Transamerica has, as of the end of March, is going to withdraw from the individual long-term care insurance marketplace. The sales weren't enough to really support that. They will, of course, support all their in-force block and continue to do so. And then we've seen at a local, state level, and national levels, and I think you're going to see this very much in the future, the next 4 years, ideas on how to handle long-term care issue, because it's such a big national issue. And there could be some type of revival of the concept of a partnership where there's a backstop with government programs, but there's also incentive for people to purchase private coverage too, so that they coordinate well. I think similarly the way Medicare works with a pretty robust Medicare Advantage and Medicare Supplement marketplace. So we'll have to see how that goes in the future as well, Steve.
Yep. The only other, I don't expect any legislation to get passed anytime soon, but the one thing that we're getting behind, and we would suggest that you get behind too, is Senator Toomey from Pennsylvania proposed a penalty-free withdrawal from an IRA or a 401k. They cap it at about $2,500 a year, but you know the system is not perfect, but there's a ton of money out there in the 401k world. So I think that would be a tax efficient, a better way to go get money to protect the integrity of your 401k. So we'll keep you posted on those, but you know, I think that one is certainly one to get behind.
Yeah, let me just add that NAIFA also has a great deal of interest in Senator Toomey's proposal and has been supporting and chatting. And so if any of the participants have anything that they feel we want to know, feel free to contact either Steve or Tom or I with any thought that you have in terms of support.
Yeah. You know, Carol, a lot of times, you know, it's human nature, right? Bad news travels faster than good, you know, particularly with the long-term care industry. You know, we've taken our lumps and we've seen significant contraction in this industry, but I always like to share with advisors and clients that this stuff works. We've been around long enough as a brokerage firm and, as advisors or agents on cases where we've got people on claim, a lot of people on claim, and industry-wide, the insurance carriers paid out over $11.6 billion to policyholders last year. That's a big number. Those numbers are continuing to increase, and there's tremendous value in these policies. And there was a recent research report that was put out, and just email us, call us if you want to see it. And it showed the impact of long-term care insurance on our state budgets, on Medi-Cal here in California, or Medicaid nationally, and Medicare. So bottom line is, this stuff works.
Steve, I think to that point, don't take our word for it or the insurance carrier's word. A good resource for that is local home healthcare agencies, and go like, hey, what do you have a client with long-term care insurance? How does that work? And they can explain what a dramatic difference that can really have. And people want to get care at home, and they are a great cheerleader for long-term care insurance, the home healthcare agencies.
That's a great point. So, this is interesting. We're all busy, right? I sit on a lot of webinars, and if it's something off topic, off what I do for a living, you go, okay, that's interesting, but am I really going to do it? Am I really going to add this to my business? And here's why we're suggesting that you do add this to your business. If it's not your business, it's a great way to insulate your client relationships and add another product line. It's a great way to add additional revenue for you. It's the right thing to do, as we're talking about here today, to help your clients plan for long-term care. But why should I talk to my client now about it in the midst of everything we're experiencing with COVID? And I would just say, you got to take advantage of the heightened consciousness. Turn on the news, go online. Nursing homes have been the epicenter of this pandemic. Nearly 50% of all deaths nationally. So what does that mean? It means your clients, it means your peers are saying, I am never going to go into a nursing home. That's the last thing you'll catch me in. And so the type of planning that we're talking about enables somebody to be cared for on their terms, at home, in the event that they need to go to high-end assisted living facilities, then that's available as well. And certainly the skilled nursing component is there with this type of coverage, but the bottom line is this gives people peace of mind today that the care is going to be on their terms in the setting in which they want. I mentioned it earlier, joking around about my wife and her allergies, or Carol's for that matter, but healthcare is front of mind. Healthcare, we're thinking about healthcare these days, not just because of the pandemic, because of rising healthcare costs. We got to get a handle on that as a country. So it's not like a foreign conversation when you talk about retirement and healthcare costs. Tom, you mentioned, the low interest rates and the repricing of products. In your experience with the carriers, have any of them said beyond Transamerica that, hey, we don't like this business. We don't want to be in this business?
No, and Transamerica liked the business, so it just wasn't a big enough part for their global group. And, often you've got the more conservative, long-time mutual companies who will take a longer view of their business. But I do think that they're very comfortable with the way the products are priced now. They want more of this because they really see the need for it. They're getting more experience on how claims are paid out. The benefit trigger has been consistent for the last many years. So I think they've got a good grasp on it, and actually it can be a win-win, the carriers and the consumers buying this product. We talk about offering it now or building awareness now. A couple points I'd like to make too. We've obviously seen a lot of froth and records in the stock market. And I think a lot of people are going, how do I protect myself from a downturn? And now might be a great time for people to go, hey, maybe I should start investing some of my money into a protection product that can help cover me now and in the future. I think that's important too. And the additional awareness of these group guaranteed issue life long-term care plans at the employer. I think it's going to benefit the individual advisor as well, because that awareness will lead to conversations. And often the guaranteed issue is fantastic, but often the health underwriting gives people with really good health the ability to maybe get some really impressive deals as well. So the awareness overall is going to benefit everyone.
Yeah. So hopefully those are just a few reasons why you might pick up this conversation. If you're having strategy client meetings with your clients in Q1, I would bring this up. So why are employers doing this? When you're making that pitch to an employer, why are they pulling the trigger and deciding to take action, whether it's for an executive group or whether it's for the rank and file? Typically there's three reasons, why employers are offering this. Better underwriting, as Tom just mentioned. You have sometimes simplified issues, sometimes guarantee issues, sometimes reduced underwriting, whatever you want to call it. It might be a more streamlined underwriting process. In the group marketplace, you have gender neutral rates in many cases. You might have corporate discounts that are available. Now, it's all going to vary by the size of the group, by the funding strategy, by the insurance company that you're looking at. But typically, on average, you might see better pricing. And then again, this fits into all the financial wellness education that you're seeing out there. It's timely education around healthcare and retirement planning. And frankly, a lot of employees, they don't know about this risk. Until you have like a firsthand personal experience with it, you're focused on other things. So, we think those are three of the reasons why people are looking at long-term care and employers decide to move forward with long-term care planning. So,
Steve, let me just ask you something before you move on. Suppose you're not a specialist in this area, but let's say that you deal in the life insurance area, you deal as a P&C agent, so you're in touch with, various business owners, you have a relationship going, but this is not really your area of expertise. So they could come to you and you guide them through the whole process, more or less. So if they have the ability to expand their practice, as you said, why now? Yeah. One, it's a good thing to start a younger agent.
Yeah, and we didn't want to make this self-serving. I think big picture.
Well, but I think it's important for them to know that if they have this kind of interest, there's a couple of ways that they could grow their business, and absolutely. Adding this and having active help.
Yeah, absolutely. I always think you got three options when it comes to finding expertise: build it, buy it, lease it, right? and so there are LTCI Partners does this, as does a number of organizations do a great job, supporting this segment of the marketplace. Tom, I jumped on you. Go ahead.
Steve, you talk about the 30 years in business, and I remember times, and I'm sure you do too, where you'd go maybe do a small group case and you'd get 8 applications. You'd have to get them all done by paper, and maybe you'd have to get spouses involved to get their applications. And then it was like application roulette. You would turn them over and be like, oh, one of these 18 is going to be the killer. Yeah. And so the way things work nowadays, you can do such a better job with field underwriting, with, of course, electronic applications, doing it over the phone, being more customer centric and allowing people on their time to do this. So the experience for the insurance buyer, even though we've got a long way to go as an industry, is getting better and better all the time. And I think the pandemic helped with, boy, we can write anywhere in the country and help do all that type of support.
I do too. And again, like Tom said, we're not there yet, but I know consumers are. Like I know my family is. They are used to click to buy. Mm-hmm. Empower myself online, learn a little bit about it, talk to somebody via chat maybe, and then click to buy. We're not there yet with all the carriers, but we're pushing. We know that's where we have to go as an industry. So you're thinking about your own book of business, hopefully now. We've talked to you about there's an opportunity, the timing is right. There are more options than ever before, and we'll go into that in a minute. We kind of cut up the market into 2 segments, more than 500 and less than 500. I know if you're a NAIFA member, you're likely in the 500 or less employee space, but let's talk about the 500 or more first. A lot of options. There used to be a lot of traditional group long-term care. That went away. And then there was a pivot to multi-life long-term care, individual contracts with discounts and concessions. And we do have that available. And then you have group life insurance with long-term care benefits, as we'll get into in a minute. But there are a lot of different product options. Tom and I have signed NDAs recently with a couple carriers. We think there's going to be a couple entries into the group life with long-term care benefits space in 2021 and early part of 2022, and we're excited about that. But that's a robust market. You've got multi-life long-term care with a number of carriers. You've got individual long-term care, and you've got group life. If you're focusing on the small to mid-market, forget about the bullet number 1 that says it usually requires employer funding. Not always. I don't want you to think that it has to be an executive carve-out only. This could be a sponsored program that's offered on a voluntary basis. But to Tom's point, there's a little bit more heavy lifting involved, right? You got to go chase people, and you have to have a bona fide communication strategy to get people's attention, to grab their interest regarding this type of a benefit. And then you have the application fulfillment process as well. So it doesn't necessarily always have to be employer funded. Downstream, you can do it on a voluntary basis as well. You've got traditional long-term care insurance with these multi-life programs. And then you've also, the group life, it depends on the carrier. Some of them will go down. Some of them are more interested in the large group marketplace. It just really varies on the carrier. And Tom, when it comes to enrolling these types of groups, what are some of the best practices? How do we get people's attention?
Well, I mean, people now are with voluntary programs on the larger group size. The whole key is you've got a limited period of time to sign up to get the offer in general. And so that drives the decision. And typically a lot of our activity in those last couple of days of an open enrollment period for a benefit where people can go online and often they make big purchase decisions in a really quick period of time, faster than you'd think. But email communication is really important. Personalized rate quotes, landing pages that are customized with education videos, all of that very critically important for that. For any size group, just having call center support so people can call in and have their questions asked so they can do plan designs, find out how much it costs, and then go ahead and schedule the enrollment process if an online application is not available.
Right.
Can we pause for 1 minute? We have a couple of questions that I'd like to insert here. One is, can advisors who work exclusively with individual and not group products be effective at group LTC sales and implementation? Kind of relates to the question I asked earlier about what if I'm only doing individual at the moment?
Yeah, I would say number 1, if somebody can do executive disability or executive life insurance or life insurance in a corporate marketplace or with high-end clients, they can certainly understand the long-term care and how the product works. In terms of the support, you're going to need to align yourself with somebody that can support that type of enrollment. But in terms of tip of the spear, can I present these concepts in a articulate way? Absolutely. I think it's just about boning up on product and what you're being shown from a brokerage partner. But you're really going to need the help from a support standpoint.
Right.
And I would say for the larger groups where HR is often involved and they've got the barriers to entry are higher, definitely. Yeah. And you need to hopefully, and many times partner with other organizations who have a relationship, I think is critical.
Right. The other questions relate to who's writing in the group market and is anything available in the state of New York? And I would say to those people posting those questions, just wait a bit. We will get to that.
Yeah. But Carol, that's like my if you ask me, like, what do I do each day beyond developing business in the corporate marketplace? It's trying to figure out what the right fit is from a product standpoint. You figure out, is this going to be funded? Is it going to be voluntary? Is it a one state employer, or is it a multi-state employer? Is it a state in which, we don't have regulatory approvals on those products and I'm handcuffed, with those products? So I think it's such a good question, and we're going to address it now. Here's my disclaimer on this. Carol used one regarding the tax treatment and tax advice. Here's my disclaimer on this one. This is a partial list. This is not all of the manufacturers or carriers out there in the space. And the employees, like the minimum for consideration might be a little bit off, might be different. I update this, regularly, but this is just kind of an internal cheat sheet that I'm sharing with participants here or attendees here. You've got on the top end side, group life with LTC benefits. Typically those are guarantee issue, for all eligible employees. The spouses have some form of simplified issue. And they're typically built for voluntary enrollments. These are not like, hey, the employer is going to pay some and then you're going to pick up the rest as the employee. Those are truly worksite group life insurance programs with long-term care benefits. And the way they work is you're typically getting a death benefit that you select based on your budget, and you get 4% a month for long-term care. Now, they might be sitting on a universal life chassis, a whole life chassis, a term chassis, but the long-term care benefit typically works the same way, where you have 4% a month for long-term care for whatever type of long-term care service and support. There's usually an extension of benefit with some carriers, so you might have a pool of dollars that doubles or triples your initial death benefit. Tom, anything else on the products, those products?
No, I think they're evolving. I think they were kind of designed for a different type of account, and I think that they're evolving to be more of more robust products that carriers realize they can deliver on that chassis.
Yeah, I mean, we're pushing them. They've been great, and we're pushing them to provide more long-term care benefit on those products than they had in the past. Mm-hmm. And then you've got multi-life long-term care, which is kind of the next three. You have a few carriers that are committed to that space. Transamerica, as we mentioned, they're still going to be enrolling through mid-June. So, I mean, I believe in that product, and if you've got opportunities, I wouldn't stray away from it if somebody wants to move before June when they suspend sales. And then towards the bottom, you've got kind of the small group options. And again, this might be a partial list. Tom and I might have missed some on this deck, but you've got a combination program with Nationwide, and then you've got a traditional carrier in National Guardian Life that has a discounted gender neutral product with full medical underwriting, but very robust benefits. And we see that for the employer funded. They do have a 10 pay and a single pay option available as well. But again, folks, partial list. I just want to share with everybody, there's carriers that don't necessarily have multi-life programs, but that you can use in a multi-life setting. So I'm thinking of, Tom, the combination products where you can use them now. Explain that one.
Exactly. Well, I mean, some of the hybrid products in the past never broke out the life and the long-term care premiums, which kind of limited their attractiveness in the employer marketplace, because what a small business owner loves to do is make those health insurance deductions. And long-term care insurance is part of health insurance, up to certain limits, depending if it's a C or S corporation. The nice thing about the newer products is typically they will break out the life insurance portion of the premium and the long-term care. So it's very similar to traditional LTC in that perspective, where you can see, oh, for me and my spouse, I can deduct this amount of premium through the company, or I can pay for a core group of people, 2 or 3 within the business. So as you mentioned, this list is not exhaustive. It can go to other recommendations based on the particular group you're looking at.
That's right. And it doesn't necessarily need to have like the combination, the individual hybrid life plus long-term care. It's already pretty streamlined underwriting. So it doesn't necessarily have to have, the discounts, the corporate discounts, or some type of full-fledged program. Because of what Tom just shared, you could use it in a corporate setting.
I have another question, if you don't mind, from Beth. She says, as you mentioned, individual traditional long-term care policies have recently experienced some pretty substantial LTC premium hikes. What can guaranteed LTC insurance offer as far as GLTC rate guarantees or some semblance of budgetary guaranteed long-term care premium levels?
Yeah, I mean, some of the multi-life, one of the multi-life carriers I'm thinking of has like a 5-year rate guarantee on the multi-life. But frankly, as a consumer, as a distributor, I don't really care about the 5 years. I care about 25 years down the line. The combination, individual combination life with long-term care are non-cancelable, meaning it's guaranteed premium. And they do have, pay for life options. There are pay to 65 options, short pay options. So the combination life with long-term care on the individual side are all guaranteed premium. And that gives a lot of employers and employees a sense of certainty, but they're a little bit more expensive. Like you think about, I'm a believer in both, but with traditional long-term care, Tom, what are people spending and why are they looking at that in the workplace?
Well, I think to the question, those group life LTC plans are not 100% guaranteed premiums like a lot of the individual hybrid products are. Same with traditional plans. However, I think the key thing to realize with these programs is they are more conservatively priced than programs in the past. I think what it really creates an imperative for the advisor and the consumer to do that policy review on an annual basis to see how it's performing, what the trends are, and how it can be adjusted. I've had on my policy, I think 3 or 4 rate increases. Luckily, I had a 5% compound inflation rider. I was able to kind of reduce the benefit, and still it's extremely substantial, but that really helped mitigate the rate increase. So I think it's a matter of having that ongoing conversation with a client, and that's part of the role of what a lot of representatives and advisors do anyway.
Also, I want to mention, if I had my druthers, I'd have an insurance product that the rates would never go up, right? But there's a cost to that. And what we find in the middle market, if we're trying to address mass middle and most of America, you've got to find a price point that fits. And right now we're seeing that price point is usually between $100 and $120 a month for long-term care, whether we're talking about a combination plan or a traditional plan.
And the regulators, they're very wary to approve guaranteed products without understanding how they work, because they need some flexibility as well in how they deal with the promises made to the policyholders.
Yeah.
One more quick question from Neil, and I think a yes or no might do. Is there anything available in the state of New York?
Yes.
Okay. So Neil, if you want, you can contact them directly and we'll go into it, or maybe at the end if we have time, so we can keep covering. But that was the answer we were looking for.
So with this slide, I've always found it interesting. We all, as sales professionals and consultants, have different styles in terms of how we approach the long-term care conversation. Is it a financial, Tom, is it a financial discussion that they're going to be having with employers, or is it a healthcare discussion?
Well, it's the quantum physics of insurance products, right? It's both a health insurance product and a financial protection product. We found that for people who who do have their 401k balances growing, that's an easy conversation to have about how long-term care insurance can work with a retirement plan. And again, it's the ability to have knowing that you've got a plan in place gives you actually more comfort with your current investments, maybe to be a little more aggressive than you might not normally be. On the other hand, I think people who are getting closer to 65, that becomes then, okay, I'm going to have all these healthcare costs coming up. I'm going to have Medicare. What type of Medicare plan do I get? Medicare Advantage versus Med Sup. Can I afford long-term care insurance? Because when you're getting towards 65, the premiums are very expensive. You'd be surprised, though, at the type of plans you can get at those ages too. So as a good example, I know somebody who does not have a Medicare supplement plan because they realize that they can afford to kind of self-insure those out-of-pocket costs that they have from traditional Medicare, but they do have a long-term care insurance plan that provides, $200,000, $300,000 worth of benefits, because for one, it's providing a lot more benefit than what a traditional Med Sup would provide. And two, it does things that aren't there, that can really help at crisis time. So I think those are the type of conversations that are important to have. Everybody just automatically assumes, hey, I have to do it this way, but there's a lot of different ways to approach it.
That's right. So tax treatment, we'd be remiss if we didn't cover this, and I apologize if you can't see the graphic on the right-hand side. We can always send you a full piece of that, but long-term care insurance enjoys unique and preferential tax treatment. Part of HIPAA legislation back in 1996 enables business owners to pay for and deduct long-term care insurance premium for their employees. In most cases, it's not counted as income, and sometimes it is. And the benefits are always going to be tax-free. Additionally, long-term care does not have the same Erisa treatment like your 401k or medical insurance. And what that means is you're able to carve out and quote unquote discriminate and offer this to a select class of employees. And that could be based on length of service, salary, title, occupation, a combination thereof. And so the bottom line is, unlike many other types of insurance, let's use disability as an example. If I deduct my disability insurance on the front end as a corporate entity, the recipients are taxed as ordinary income on the tail end or when it pays out. And that's not the case with long-term care. I can deduct on the front end and the benefits are tax-free on the tail end, and we can pick and choose who we want to offer this to. And so in the small to mid-market with a lot of closely held businesses that you're working with, we see people buying individual or traditional long-term care, and we see people buying combination life and long-term care and taking advantage of those deductions. So Tom, talk about a couple different ones on the left-hand side here.
Sure. A lot of people are familiar with the C corporation. You've got kind of a quote unquote unlimited deduction for the premium. So, and it's not considered income to an employee, and the benefits are tax-free. So that's why in this hierarchy, it's really the most preferential way if you've got a C corporation and buy long-term care insurance to do it. But the other ones are great too. For a self-employed or an S corporation owner, every year they kind of increase the premium deduction limit, which is great, even though the premiums aren't necessarily going up. So you'll find that you can often capture a lot of that amount as a business owner of deducted premiums. We know that there's not as many people expensing medical expenses itemized as there were. There's a bigger standard deduction now, but there's at the same time, more people have health savings accounts than ever before, and people handle them different ways. I mean, I know some people who purchase all of their, healthcare with after-tax dollars. So they fully fund their HSA, they let it grow over time, and there's no time limit on when they can reimburse themselves for those expenses that occurred. So they keep a file folder, they scan all their medical bills, and they can reimburse themselves in retirement and take that money out tax-free. Same thing with long-term care insurance premiums. If you're paying your LTC premiums in your 50s and now you're in your 70s, and you've got a substantial HSA balance, you can go in and go like, hey, I'm going to reimburse myself for that long-term care premium I paid 20 years ago or whatever. I think it's really cool. And if you do have HSAs, you've got a lot of opportunities to kind of pay with pre-tax dollars to do that. The 1035 exchange is more on the individual market side and not in that context, but we mentioned briefly with the hybrid plans that do break out the LTC premiums, you can take advantage of that as well.
Yeah. So one last thing that we'll cover before we turn into the Q&A is the issue of elder care and caregiving in the workplace. I've got an experience right now with mom. My mom is 80 years old, and she receives 3 days a week of home health care. She's living independently, thank God, and she receives 3 days a week of home health care. But there have been times during this caregiving journey that I've had to get off of a Zoom call like this, right? Apologize and abruptly leave and say, I've got to go, and go run and deal with it, whether it was, hospitalization or, having to move meetings to go attend physician's appointments with her. Look, this is not a sob story. This is real life. I'm an executive at a company working full time, and I'm dealing with this. And guess what? So is everybody else. I think 20% of the American workforce, as you can see here, is caring for a loved one. And this is becoming a bigger and bigger issue in the corporate world. And many employers, small and large, are trying to figure out ways to help employees deal with caregiving and elder care. I'm not talking about this as a Trojan horse for selling long-term care. Tom, talk about some of these services that companies out there provide.
Yeah, you're seeing a lot in the startup world, a lot of companies, money being put into it because they understand your exact issue, Steve, how important it is. Everybody's dealing with childcare and often senior care issues. And some of the insurance companies have excellent claims and care coordination features available. But above and beyond that, there's other companies that will also do and help manage it at even a higher level to say, I've known people who've got COVID, had to come home. How do you get the home set up to take care of them? There's organizations though to go in and find the oxygen or the hospital bed that needs to go in, find the home healthcare worker that's going to come in and maintain all this. These are meaningful conversations. And like you said, Steve, it eventually could end up in a conversation about financial protection for somebody in an insurance sale. But in the meantime, you're really helping out with some of these advice services.
And you're going to see more and more. We've seen a lot of the employers that we're working with on the group long-term care side implement these types of caregiving and elder care services as a voluntary benefit or as an employer-funded benefit for their employees. I think the employers these days aren't just looked at for just, hey, what's my medical insurance going to look like? I think there's all kinds of stuff going on now with respect to financial guidance and certainly caregiving guidance now.
Right.
Yeah,
So, Carol,
I would agree with that. I think a lot of people now in times of difficulty start to look to their employer for trusted advisors, trusted programs, and trusted things that they can get into. So I want to just first point out to everyone that Steve and Tom's contact information is there because in our Q&A, we have several requests. For example, Tammy would like to know about, Beth wants to know about the tax treatment, and she would like, of course, a copy of the graph and of the side-by-side that you put up. As for questions, we have several that focus again on New York. And one of them is that many carriers offering LTC in New York, but who would be actively accepting apps for LTC in New York? And if they're not, is there some special reason? I think all three of us know the answer to why there aren't so many carriers, but I think it's good that you address that.
Yeah, I mean, look, we face challenges as an insurance industry with certain states in terms of their approvals on product lines. I think every manufacturer wants to be in the state of New York or the state of California with their products, given the populations. but it just takes time and it takes money and effort to get these products approved and in there. We are limited in the state of New York with respect to some of the multi-life programs that we offer. It could be based on the employer size that we have programs available. Sometimes you have to get creative. Sometimes you have to use an alternate situs if you're using a group product and you have another office, not just in the state of New York. So there's always a good and bad with New York. We can take it offline in terms of the size of group, the employer funding component, but you got to get creative sometimes in the state of New York. And I will also say, we talk about the challenges in New York. One of the positives is there's a 20% state tax credit in New York, right, for buying long-term care insurance as well. So there's on top of the federal deductions as a business, there's a 20% state tax credit for the consumer. So that's a positive for New York.
Thanks, Steve. One of the other questions Lisa put out for us was when you had the slide up about the different carriers, she'd like to know which of those carriers allow coverage to be paid to informal as well as family caregivers. Is that common in group?
Yeah, it is. I mean, it is. Like with the group life plans, it's typically an indemnity benefit. And so, you can use it with informal caregivers or family members. Certainly there are carriers out there on the hybrid or combination individual life and long-term care plans that offer indemnity benefits as well. And even a traditional carrier that has a more traditional reimbursement model has a component of their product that allows you to take cash that month and take care of family members. So there's flexibility.
Okay, we have a couple of general questions, but before we go to that, Tom had asked, did you mention that Transamerica was getting out of the individual long-term care space?
Yes.
We did.
Yeah, and for that matter, multi-life. Aegon, their parent company, did a strategic business review and decided to suspend sales in a number of different product lines, long-term care being one of them.
Right, they're going in another direction. Aegon is a Dutch company, and so long-term care just does not generate enough of their entire book of business internationally. So it's not that they don't like it, it's a business decision, frankly. Yeah. And then we have another question from Stan. He'd like to know what carriers are doing to advertise LTC and group LTC.
I think you've seen some advertisements of the hybrid products, the linked and mostly individual. I think, we've seen like Bright House is been doing some ads during football games. And, I always wonder though, it's like, who's getting these ads? I'm always Googling long-term care insurance for my job. So am I getting all these ads projected to me just because I'm into it? But I think that competitive marketplace, you've got other of the hybrid carriers who are promoting it as well. But
I don't think you're going to see, like, beyond Bright House, I don't think you're going to see carriers today spend real big marketing dollars specific to this product line. Most insurance companies are broad in terms of their protection product portfolio, but not specific to one of the product lines. It's on us. Like, the onus is on us as general agents, as distributors, to go out there and spread the word. The manufacturers are providing us what we feel are very competitive products, and we got to go out there and tell our story like we're doing today.
Thank you. We have another question from Beth. And first of all, I want to take 1 second to thank all the participants for sending in the questions and for joining and really participating. It's been a great session. Beth's question is, she likes working with C Corps, especially for key execs, but from her understanding, the favorable tax treatment for the C Corp for those key execs may not be the same if a hybrid life with LTC care riders is used. Could you address that? Does switching from traditional individual LTC products into a group LTC product versus a hybrid LTC product with long-term care riders impact those C Corps tax treatments?
What you're really looking for is the premium for that tax qualified 7702B rider. So if you've got a hybrid product in which it shows, hey, a portion of your premium is, for the long-term care rider is this, and then the portion for the inflation is this, you can take both of those portions as the deductible premium. So in that case, you've got the life insurance benefit, but typically we're not maximizing the life insurance benefit on the hybrid plans because that's really geared for the acceleration of the death benefit for the long-term care. So no, the answer is absolutely. As a C corporation, you can get substantial deductions for some of these hybrid life long-term care plans, as long as they break the premium out. If they don't, then it's going to be more difficult.
And here's a question from Linda. In the list of carriers that we quickly looked at, which as you mentioned wasn't exhaustive, but just some that you wanted to kind of categorize in different ways. Of that list, do they require the writing agent to belong to the state LTCI partnership plan?
No. You have to have CE, like you have to be appointed and have all the credentials, but it doesn't necessarily have to be a partnership program.
Good. Okay, we have 5 more minutes. I am searching through. I know we had a couple of other questions here. And a lot of it has to do with, actually working in the market and not necessarily having the expertise and so on, et cetera, which is why I had introduced the question to you guys before, that even if you're not an expert, if you're in the individual market, which is where I started out, working with a firm that, such as LTCI Partners, that specializes in working with financial advisors, you're going to find that you're going to get the support that you need. And it opens up an entirely new market for you and for your firm. So I think it's important that we walk away from what's been an excellent session with the idea that we can expand our business. For NAIFA, we have the Young Advisors team. Why not introduce 1 or 2 of them into NAIFA and bring them into your business to show them how the group market and specializing in that area can provide a wonderful living and helping people. Does it get any better than that? So with that, I think we are right at the top of the hour here. I want to thank Tom. I want to thank Steve. They always bring so much to the table, and they are founding sponsors for the LECP Center. And so they have been working with NAIFA as members, as sponsors. And so we're very grateful that you've taken time out of what is a busy schedule to spend the day with, or the morning, I guess it's right in the middle, with us. And we also want to thank all of those who were on the call and participated.
Thanks,
Have a great day.
Thanks, Carol, and thanks for the work you're doing with the LECP. It's some great future for this organization.
Thank you.
Thank you.
Bye-bye.
Bye.